Hey guys, welcome back to another video. In today's video, we'll be going over exactly what it says in this title right here. How to pass a funded account challenge in a single trade, right? How can you pass a funded account in a single trade? I'm going to be showing you exact trades that I took the week before last and last week in order to pass another $10,000 account to add to my portfolio, right? And I've broken it all down for you step by step exactly how I managed to do that. If you're new here, my name is Ria. I have been trading for 4 years now. If you find value in this content, please make sure that you hit that subscribe button so that you never miss out on free value that I'm providing to you guys, like this video right here. So without further ado, let's get straight in. When it comes to a funded account, guys, some of you might be familiar with the fact that you might have two different stages of your funded account. You might have a one-step account, or you might have a two-step account where you go through an evaluation and then you go for a verification. In this case, I went for an evaluation and a verification. The first step was to make 10,800, so make 8% on my account. And the second step was to make $500 on the account, right? And I passed them both in two single trades. That doesn't mean I passed them both in 2 days, because there's a minimum trading day window that you have to fulfill. So within those days, I was just placing trades with like a 0.01 lot size just to make sure that I was fulfilling my trading days, but I wasn't losing anything. So yeah, I'm gonna break down exactly those trades. I've journaled them and I've got the evidence and the receipts to show you as well. So first things first, it comes down to your understanding. So this is my exact strategy. I'm not going to make it too complicated. First thing I do, hop on the chart, right? I might look at the euro one day, or the euro versus the US dollar, or I might look at the gold versus the US dollar. In today's case, I'm looking at the gold versus the US dollar. So I just glance at the daily. I like to actually identify what is the daily doing. Are we tapping into any POIs? So as you can see, the market by that point, so I took my trades from around about here. But at this point, the market had tapped into a significant zone of imbalance. It's literally tapped in, wicked in, and it's starting to reverse from there. But that led me to believe the market was going to continue up for a point of time. What I do then is scale down to the 4 hour and I mark out my range. So as you can see, the market broke past this low to tap into this big imbalance here, and it's created this new range confirmed by this minimum 3 candle pullback here. So what I did is, if I take off these lines, actually, let me just take this off so I can show you guys right from the start. So I got my Fibonacci tool and I drew it from the top of the range to the bottom of the range, right? And as you can see, we've got a high, 4 hour high. I don't usually label mine just because I'm at that stage now, but if we wanted to label it, we can, just for understanding. My encouragement is that, you know, if you're just starting out in your trading journey, you try to label things as much as possible. So it's just like, you don't just have that line there, you know exactly what that line is for. And for a long time, I was just labeling everything just to make sure it was solidified in my brain to the highest degree possible. Okay, so now we have our range marked out. By the time I was looking at this trade, we were probably, let me get a white box actually. Okay. So by the time we tapped into this, that imbalance, right, I knew that the market was at the bottom of a range. Once it confirmed with this 3 candle pullback that it was part of that range, I knew it was probably gonna want to head up to this 50% to continue higher, and then, you know, start reversing back up like this. Where's my pathway tool? So I knew it could have done something like this to continue to the 50% and then potentially come back lower, or potentially do something like this to retrace back to the 50% of this range and then continue to make higher highs and then continue on like this, right? Because you could say that this is tapped into a very significant level of discount within this market, within this range, right? So what ended up happening, so once I've glanced at the 4 hour and I've got my bearings on, you know, am I looking for buys or am I looking for sells? In this case, I know I'm looking for buys because I feel like the market was going to come up from this point back to this 50%. So I like to trade the 5 minute, right? You can trade the 15 minute, you can trade the 10 minute, it's up to you. I like to trade between the 5 minute and the 1 minute because I just feel like it gives me the most precise entry, right? So I'm going to be giving you guys a checklist as well, because, you know, I like to keep things very transparent around here. So first things first. Oh, that's very big. Let's do 14. So one, understand your daily bias. So in my case here, I am looking for buys, top down analysis. So we go from the daily to the 4 hour to the 5 minute to so on and so forth, right? Next thing I'm going to do for the day anyway, right? So this might be me analyzing my chart on a Sunday, but when I only really do light analysis on a Sunday, but if I come down to the chart on a Tuesday or a Wednesday, I want to check news, right? I need to check the news. I need to know, is there any news that is going to make the market conditions volatile today? So in my case, I would go to Forex Factory. So on May the 15th, which is when I took the first trade. As you can see here at 8:30 a.m., there was some high impact news for the US dollar. So I needed to be cautious about entering at that time. Usually my session opens at 1:30 p.m. So I've checked news. Come to the chart at session open. So for me, that would be 1:30 p.m. onwards, right? And at 1:30 p.m., if there's going to be high impact news, I'm not going to take a trade at that moment in time. I'm going to wait to see what price does in order to, you know, hold off and getting into entries, because I don't want to get into something and then a market does a very volatile move and then stops me out, right? I want to avoid all of that. I want to avoid that at all costs, but that's me personally. You might trade a different way. You might want to trade news, but personally, I don't. By the way, this is 1:30 p.m. London time. So that would be 8:30 a.m. New York time, because I trade the New York session. You might trade the London session. It's up to you. So as you can see, this is the exact trade that I took. I took it at 1 to 5, so a 5 RR. And what I did was identify the daily trend. I knew I was looking for buys anyway. As you can see, the market conditions here, they're very much trending. They're not really very volatile. It's a simple uptrend, so it'd be quite easy for you to catch a move in this market anyway. But also there are other confluences that we need to take into consideration. So for example, on the higher time frame, we knew that the market was heading up towards the 4 hour 50%. It had just tapped into a POI, which was, you know, a higher level of imbalance, and then it shot off from there. So we knew that we might be able to continue taking buys from that point. But as you can see, the market is making a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, etc. What I did is, knowing the patterns that the market adheres to 70% of the time, what I like to do is just take a little tool to help me mark out when my session opens. So if my session opens at 8:30 a.m., right, I'm going to be starting to look for entries in and around that point. Right, I'm going to be starting to look for entries in and around that point. As I said, there was news here. As you can see, probably by this big candle that has pushed up, and the anatomy of the candles in and of itself. But me knowing that my session opens and the move starts to happen at about 8:30 to 9 a.m., I wait for what's called either Wyckoff distribution or Wyckoff accumulation. In this case, I can see Wyckoff accumulation has formed, right? What we didn't do here is a massive retest of the spring, because the spring was formed quite early. But either way, we can see that the market has changed character. So the next thing you're going to want to do, so once you've identified whether you're in Wyckoff distribution or Wyckoff accumulation for the day, you are going to want to identify a change of character, and where is this change of character going, and does it match up with the narrative, the story that you have to piece together about, you know, what the chart is doing that day in terms of going looking for buys or looking for sells. So at this point, I would have waited for my change of character, and then after I've waited for my change of character, I'm going to wait for the market to pull back to my point of interest. Wait for the market to pull back to my point of interest. Okay, by the time I've come to look at my charts, I have identified a change of character right here. I've identified a change of character right here. Okay, so I have identified a change of character right here. So as you can see, we break past this high that has formed. We're forming higher highs, higher lows. Higher high, higher low, higher low, higher high. Forming higher highs and higher lows, right? We've made a change of character right here. And then what I do is wait for the market to pull back. Once your eyes are trained to see this, it's very hard to miss it. Once your eyes are trained to see it. Cool. As you can see, now we're in the 1 minute and there's a lot more detail. So it looks a little bit more noisy, hence why I like to trade on the 5 minute. But as you can see, we would have had, so let's pretend that doesn't exist for right now. So what we would have seen, right, is the market has changed character to the upside right here in this move, in this leg, okay? When we're measuring out a range, what do we expect to happen? The market is going to pull back to about 50% or the 618 to be able to continue in the direction that it is trending in. So if we draw out the Fibonacci on here, we can see that the market is either going to pull back to the 50%, the 518, you just have to identify what the market is doing and be ready to take an entry from that point. But as you can see, there is this little 1 minute order block right here, this little 1 minute order block. And it's kind of in the same zone. Usually if I'm looking to take an entry between the 50% and the 786, right? Usually I'm looking for, okay, is it going to pull back to the 50%? Is it going to pull back to the 786? Is it going to pull back to an imbalance between that zone? Or is it going to pull back to an order block within that zone, right? So I've identified there are a few places it could potentially move off from. So in this instance, I went with the order block and I would have drawn on my position tool. So trying to keep my stop loss as tight as possible, right? I would have moved my stop loss instantly. Once I've seen it moved off, I move my stop loss instantly just because I want to give my trade a little bit of room to breathe as soon as I, hop on the charts. But so once I've drawn on my position, I need to identify a take profit, and the take profit I identified in this trade was an imbalance a little bit beforehand that wasn't necessarily filled. So as you can see, there's this little imbalance right here. It's quite tiny, but it's still an imbalance. And then there is this big imbalance up here that I feel like it might have come back up to fill. So those are all confluences, right? So if we take those off, I kept my TP here. So what I would have usually done is put my stop loss here and then put my you see, if you put your stop loss below this range, right? If you put your stop loss below the range, you are going to have a significantly lower risk to reward ratio than you would if you put your stop loss really tight at the bottom of this order block. Hence what I did. So what I do is wait to see if I put my stop loss here when I first moved off, because I wanted to, give my trade some room to breathe. But if it moved off significantly and then broke past this range, which it did, as soon as I've seen it broke past that range, I'm moving my stop loss very tight to the bottom of that order block. I have secured a nice bit of profit. And what I do is, as the market is creating new highs, I secure partials at around 50% and then wait for it to either hit TP or trail my stops, to make sure that if the market for whatever reason decides to come back down and hit my stop loss, I've secured some profit. I'm making sure that I'm building up my account towards that end goal. Okay, so that passed me my phase 1. Okay, so I waited 3 days. On the 4th day I traded, and that passed me my phase 1. Okay, how did I pass my phase 2? Let me break down the trade that passed me my phase 2. So as you can see here, similar situation, right? The market still hadn't reached this 50% point on this 4-hourly candle, sorry, on this 4-hourly time frame, 4-hourly range. So I was expecting the market to still be heading upwards and to still be looking for buys from that point, right? Was there news on this day? So this would have been the 20th. So let's go to the 20th. So there was not news at my time of entry, so I didn't need to be cautious. But as you can see, there was quite a great push up. So I was quite pleasantly surprised actually. And I managed to, obviously, like I said, secure my account within one trade. So what I did is waited for a Wyckoff accumulation, right? I identified whether we were in a trending market. And as you can see, the market was making a series of higher highs and higher lows, right? And it got to the point where right here, I saw a change of character. I identified a change of character right here to the upside. Okay, as you can see, the market breaks past. So there was a minimum free, it's not very clear, but there was a minimum free candle pullback here. So the market closed 1, 2, and 3, and then it moved up to create this high, which it looks like a wick, but it's actually a high on the 1 minute time frame. So as you can see, there was a push upwards, right? A change of character right here where it broke structure, leading to this high. And then what happened, right? So let's pretend all of this doesn't exist for a second. So what happens? We identify our range once again. So the bottom of the range is here. What happens, right? What happens? I usually say, like I said, you want to identify your POI somewhere between the 50% and the 786. And in this case, there was a little imbalance, right? As you can see, there is a little imbalance right here. Yeah, there's a little imbalance, but there's also an order block. There is also an order block on the 5 minute time frame that we've identified right here. So what would I do, right? As I can see that it's failed this imbalance, it's failed the 50%. I'm going to see where the market wants to tap back down to, and I would place my entry right at the top of this order block, my stop loss at the bottom of this order block, or the bottom of this range if I wanted to give myself some breathing room. Let's just put it at the bottom of this range. I would have moved it to tighten my stop loss to the bottom of that order block as soon as I entered and I seen it shot off. And then I want to identify another point to where I feel like the market is going to go to. In this case, the 50% was not far. So I put it at the 50% because I felt like it might reach the 50% on this particular day. And as you can see, right, the market played out perfectly. What happened is as soon as it tapped into the POI, it tapped into this order block. Sorry, this is a bit not accurate. Like, you need to be really precise when it comes to market. So cool, it tapped into the order block right here. It shot off, right? It shot off. At this point, you see the market. The reason why I gave myself some breathing room is because that was a very tight stop loss. It was a very tight stop loss. And you can see the market taps back down, just wicks the bottom of that order block, and then just wicks the bottom of that order block, right? And then continues to shoot off to the upside, right? It shot off to the upside. Obviously, like I said, I took partials at 50% and I trod my stops along the way on the 1 minute time frame. But then, literally right then and there is exactly how I passed phase 2 of my funded account. And it's literally just as simple as that. It is literally just as simple as that, guys. You want your trade to play out. You want to wait for your trade to play out. In this instance, once I hit the profit target, I just closed. I closed my trade out straight away. This actually could have made me, I think I closed out maybe about here, because it had hit my profit target. But if this was on a live account and I could see that the candlesticks and the candlestick anatomy was doing something like this, right? You can see it pretty much hit my TP and then, you know, continued to trail off, but it didn't really have too much movement after that. But at that point, you can potentially remove your take profit and just let the market run into profit and milk your wins. Basically, when you want to when you can see that the market is doing what you want it to do, milk your wins, but also trail your stops to protect yourself, right? Don't be scared or don't be greedy. So just to complete this checklist so we wait for the market to pull back to my POI 7. Obviously you enter. Don't be scared, right? Do not be scared. Wait for the market to play out. Wait for it to play out. 9, take partials. Take your partials. And 10, don't be scared, but also don't be greedy. Manage your psychology on the trade. And if you manage your trade well, you put your lot size at a healthy position, you trail your stops, right? You understand when to take profit. You don't just watch the profit flow in, you understand when to take profit. I guarantee that you will be very, very successful in this market. And this is the exact 2 trades, I should say, that helped me pass my another $10,000 account that I can add to my portfolio, right? So if you found value in this content, please make sure you like, you comment, you share with somebody that might have needed to hear this, and you implement some of these tips into your own trading, right? Don't just sit on information and do nothing with it. If you see that your trading strategy is not working for you, if you see something is not working for you, sometimes you need to pivot, but you also need to stick at something long enough to see a change and for you to acclimatize yourself to it, right? But give yourself that chance, okay? So yeah, thank you so much for watching this video. Please, before you leave, please make sure you subscribe. Otherwise, I might never see you again. Other than that, guys, I will see you in the next video.